Hi, everyone. Welcome to, I think, is this the fourth or the fifth already, Vishal? I think it's a couple of times that we have been doing this, isn't it?
Yes, it's a fourth webinar we have.
The fourth webinar. And for those who are new to TMP, we are a payment advisory firm based in Singapore. And at the heart of everything we do, it is we have one belief, which is payments knowledge should be accessible to everyone. And therefore, we are running this payment club. So, what is this payment club? It is a global community of about 700 payment professionals, and honestly, a lot of what we cover from many of the webinars that we have done, it is really come straight from the conversations within the community that we have built globally out of these I think it is about 700 to 800 payment professionals. So, whether you're looking for a job, whether you're hiring for your team, whether you are seeking for a payment expert opinion, networking, or you want to share your expert opinion, or just trying to make sense of what a complex payments problem is, this is the community that we have built. So we want TMP to be the place where payment folks come to thrive, whether you are here to learn or you are here to share what you know. And this is exactly what is this session is going to talk about today. So back in March this year in Singapore, we had a really great discussions with my ex-colleague, Amit Bansal. He is a former APAC head of tax at Uber. And then I was the head of payments for Uber. So with him and myself, we came together and we had a fireside chat in person in Singapore. The big takeaway from the sessions that we had, it is that payment doesn't just exist in a vacuum. The tax lens matter more than what we realize, because when we both were strategizing on payments, be it a local acquiring, be it Australia or Japan or India, there are so many different takeaways that we learn, especially between tax and also payment. And that conversation is actually sparked one more questions, and one that has been kept coming up from the merchant in our network. So a couple of weeks ago, we received merchants. They're saying like, "Hey, we are a foreign entity, and we are PACB compliant because we are processing cross border. Are we actually fine? Are we okay?" Well, I realized that after I spoke with Vishal and Amit, we realized that it is not necessarily like that, because if your if what you're selling is actually fall under something called OIDAR. And what is this OIDAR? It is basically online information, database access and retrieval kind of category. And the common example that we're looking at will be streaming platforms like Netflix, Spotify, online gaming, ebook, software as a service like Canva, or like many of the AI companies, including digital advertising as well. In fact, there is a 18% of GST obligations to the Indian government especially on the B2C transactions with Indian consumer. So more and more, we find that it is a lot of merchants simply don't know this apply to them, and Binance also find it the hard way on dealing with it. So did we hear many other companies having the same problem. So what we have today, it is we will breaking it all down in this session today, and what is OIDAR means, who it catches, what you can actually do about it. We have two brilliant guests joining us. Aisha Husaini, she is the tax payments at Ernst & Young India, and Harsh Gupta. He is the cross-border head at Cash-Free Payments, and I will have them to introduce a little bit about what do they do subsequently. And holding it all together, my co-founder, Vishal, will be moderating these sessions. So Vishal, I will stop over here. The introduction is done from my end. Let's dive in. Over to you, Vishal.
Awesome. Thank you so much, Chi. And thanks everyone for joining. I see people joining from China, from Hong Kong, from Australia, and also from the United States. So thank you so much again for taking time, especially those in US, for the late night. Really appreciate it. So I'll give a little bit of my background first, and then Aisha and Harsh will let you introduce yourself. I've been in payments for almost 15 years now. I met Chi about 12 years ago in as part of my job. She being the salesperson, as you would have seen or heard in the last 5 minutes. She was trying to sell something to me, but in 10 years, it never ended up happening. However, we ended up, selling friendship to each other, and we ended up becoming business partners to start the payments advisory. And we are super, super excited about what we have to bring to the ecosystem through the Payments Club and many other initiatives we have undertaken. For today, we are going to talk, very specifically about tax implications on payments transactions. A little background about this: when I was at Microsoft, out of the blue, we were required to, create a flow where digitization levy could be implemented, and we had to pay for that. However, the challenge is not compliance. The challenge is how to embed that compliance into the technology flow, which is why we have today with us both Aisha, who's from EY, who's going to talk from the compliance side, and Harsh from Cashfree is going to talk about how do you implement that compliance from a tech perspective. So first, we'll hand over to Aisha to do a quick introduction about herself, and to Harsh after that, and we'll get into the opening remarks.
Thank you, Vishal. So I'm Aisha. I'm a partner with EY, and I have experience in indirect tax for 20 plus years, out of which 18 and a half I've spent at EY in multiple locations. GST, I think, a very, very dynamic, hot topic, if I may call it that way, from an Indian perspective. I mean, as if Indian taxation wasn't complex enough, we threw in another complexity in GST. So we'll, over the next couple of, about 45 minutes or so, we'll try and get through that, and specific to, vendors located outside India providing services to Indian consumers, how that is treated from a tax point of view, and what are the watch out areas.
Thank you, Aisha.
Harsh, over to you.
Yeah, hi everyone. This is Harsh. I head the cross-border business at Cashfree. I've been associated with international payments for about 15 years. Majority of my professional career was at Citi, where I was the FX sales, corporate sales and structuring desk, providing FX and hedging solutions to international merchants. Last 5 years, I've been building infrastructure stacks for various fintechs, and now I'm heading at Cashfree. A little bit about Cashfree as well. So Cashfree is one of the largest fintech in payment space in India. They were one of the early adopters of the PSCB license, and which came in approximately 2023. And we have cross-border stack across both pay-ins, which is money coming into India, catering to exporters, and the importers, which is international merchants selling to Indian consumers as well. Thank you.
Thank you so much, Harsh. So, as Chi mentioned at the beginning, we are here to talk about, this GST implications for cross-border entities, right? But the basic question I have is that, if I'm a merchant, then why should I be charged for this? And it does not make any common sense to me. I'm a merchant. I'm not even registered in India. Why all of a sudden there is this thing called, hey, you have to pay 18% GST on all the transactions you performed? That does not make sense to me. But Aisha, maybe you can help us understand why this is an issue, and is this something which is very unique to India?
So I want to add to your point, Vishal. One thing I learned very early on in my career was that tax is not driven by logic. There are a lot of things in tax which are absolutely against what you would think should be. And once you get into the fine print, you realize that's not what it is. So I think the first call out I have here is that please, when it comes to any tax related matters, logic does not drive tax, right? Coming to the topic, so I think Chi also introduced what we're really talking about is a category under GST which requires foreign vendors to sort of undertake some compliances in India, which is called OIDAR, which is basically Online Information and Database Access Retrieval Services. And this is a legacy category which was actually there even in the pre-GST regime. GST has, of course, made a formal construct around compliance and slightly different, and that's why it has become more sort of interesting and something that one must talk about. So the rationale behind it, Vishal, while not logical, is really this fact that GST or any kind of indirect tax globally is generally a destination-based tax, which basically means that the location where those services are consumed, that is the location in which tax should be paid. Even in the Indian context, since we are a federal system and we have various states, even in that context, it is treated as a destination-based tax. So if I am providing services from, let's say, city A, which is in state A1, and the service recipient is in state B, this is treated as an interstate transaction. And if I extrapolate it to a cross-border situation, any services which are provided by a vendor outside India, because it is finally getting consumed in India, and that's really the rationale around consumption-based tax. The tax rate, like Vishal mentioned, is of course 18%. And recently, the tax authorities, actually for the last 1 or 2 years, I think we've been seeing that the GST tax authorities have been very, very aggressive in trying to get as many players under the umbrella of OIDR. And this is really, they have various sources of this information. One and two primary being, one is, some of the payment agencies. If as a tax authority, I reach out to a payment agency for certain details, I'm bound as an Indian sort of service provider or a resident or a tax paying entity to give them that information. The second source is also a lot of these transactions are subject to withholding tax in India. So even if, so some of those, so that again works as another source for the GST authorities to get this data point and then reach out to various merchants outside India for undertaking the necessary compliance.
Got it. Thank you so much, Aisha. I think that background is helpful. And, Harsh, when it comes to, cash free and, the larger PACP world, I think it would be good for you to educate what is PACP. Again, this is something which we've seen very unique to India. I remember there was a time where there was an OPGSP regime, which was a specific approval, which every merchant who wanted to, would get that OPGSP approval. But I think the government or the RBI made some leaps and bounds there and said that, okay, let's standardize this process. How does that look in the current form? Is it still undergoing any change? And what are the major challenges which are coming through it, outside of tax as well?
Yeah, Vishal, I'm glad you mentioned the bespoke approvals. In my erstwhile city days, I think a couple of large merchants, it took 3 years essentially to get the approval because the process was very, very bespoke. And thankfully, the PACB license is an extremely progressive license. And I want to actually address a little bit of context around why does the PACB framework exist as well. India in the last decade or so has really focused on increasing their digital commerce and the entire digitization with UPI. Fundamentally, with the focus also on ease of doing business, India has promoted international merchants to sell in India. However, these merchants will need a partner who can facilitate and tie them up with Indian local payments, do all the regulation and compliance associated with these payments as well. And that is where the PACB framework has come up. Now, why has it suddenly become so popular and there is an increased noise, also some taxation focus as well, is just predominantly because of the success of UPI. So India is a very unique market from a payment standpoint. If you look at majority of the developed economies, cards will be the predominant payment method. In India, card penetration is less than 10%. UPI is around 70-75%. Which means that any international merchants who has to tap into the larger Indian consumer segment has to enable UPI, which necessarily means a partnership with one local payment method, a PACB. The second, and it is somewhat surprising as well, but the nature of international merchants who are increasingly selling in India is like AI companies, SaaS companies, subscription-based. Recurring payments constitute around 70% of the payments in my current portfolio, which is very different from the domestic piece. Domestic is a lot of it is one-time payments, but recurring subscription-based payments is now a very, very important requirement for a lot of these international merchants, the categories I mentioned, which necessarily again involves a local payment ecosystem player, which is why increasingly PSCB itself has become a very, very important partnership. One surprising fact which I was, if you look at the 1,000 most downloaded app on Play Store, App Store in India, 600 of them are actually international companies, which at least I found very surprising as well, which just shows obviously India has a large middle class consumer segment as well, which shows the popularity of India in the international markets as well. This is why obviously now that the size of this entire industry has been increasing, I think now the regulators are looking at more transparent process to make sure that basically the I's and T's are dotted, which is where I think the tax scrutiny has increasingly become higher.
Yeah, wow. I mean, who would have thought payments and tax kind of makes sense that payments and tax go together, but sometimes it's taken for granted that if you're collecting payments, you're also remitting tax. But international transactions make it even more tougher and difficult to follow. In that aspect, Aisha, what does happen, right? Is India the only entity which does this? Is it is GST for international merchants or international transactions something which is unique to India? And is there any other country which kind of does this? And if you're a merchant, even let's say if I've just started processing transactions, I have an entity registered in Singapore or Hong Kong or anywhere else, am I still liable to collect this tax from day one?
Right, Vishal, very, very, interesting question. And, like we were discussing when we were catching up, some of the principles around taxation, while they have their own local flavor, but if you go to the principle part of it, are fairly common across the world, right? And therefore, when you look at OIDAR, it may be called other things in other jurisdictions, but we find semblance of similar tax treatments in various countries. For example, Singapore has a B2C, B2C services or digital services are taxed under this Singapore GST as well. Similar examples are there in UAE, Australia, and many other countries. I think the one thing that, and again, all of that is based on the destination-based taxed principle, right? So if you are providing services to consumers in country A, and if it was provided by a local merchant, that local merchant would have suffered this tax, and therefore to get the cross-border merchant at par with the treatment that is there in the domestic transaction is why this is done. I think the only difference between the Indian law versus some of these other jurisdictions is that we don't have any threshold limit. Even if you're doing a transaction worth, $100, technically you're required to get registered and do the compliances. A lot of other countries have, certain thresholds. So if you have, let's say $100,000, or in UAE, it's about 375,000 dirhams. So most countries have, a kind of a threshold, which makes you liable. India, unfortunately, does not have a threshold, at least at this point.
Talking about threshold, I know that when we register an entity in India, and since most of our services are delivered outside of register an entity in Singapore, and most of our services are delivered from there, we know that the GST is applicable for $1 million. That's the threshold, million Singapore dollars. Below that, it does not apply, which is kind of good, right? Is there any if you can say arm's length, or if you can say that if you are processing less than so and so amount of transactions per year, you don't really need to worry. The tax authorities are not going to come after you, but you should start taking into seriousness as you cross a certain threshold. Is that something there in India? And most importantly, Aisha, who does it apply to, right? Is there some form of a litmus test where I can say that if I classify my transactions as a merchant in so and so bucket, then I know it will apply to me, and some part is a gray area and something is, definitely it is out of scope. So do you have some some kind of algorithm which our merchants can look into and identify with?
Okay, we don't have an algorithm, otherwise we'll have to pack up our job and go home. That's what we do for a living. And tax practices in India are thriving generally. So clearly, we don't like to make things simple as the Indian government. But having said that, I mean, on a more serious note, so the definition of OIDAR is quite wide, and it applies basically to any merchant who is trying to provide services to non-registered individuals in India, right? If it is provided if it's a B2B transaction, then the burden of compliance shifts on the Indian business. But if it is a transaction between a foreign vendor and an individual in the Indian jurisdiction or the Indian territory, then the burden is that on the foreign merchant, because generally, again, that goes by the logic that individuals are not burdened with compliance, whereas businesses are. So if the business is outside India, that business has to undertake that compliance. And it applies really to anybody who's providing services which can be classified as online database access or retrieval, which in other words basically means any services which are provided using digital platforms or online service providing, anything which is which cannot be done without online access, really. That's the litmus test. If this service cannot be provided in any other manner but by online or through a digital platform, then it is likely that it is going to be a OIDAR service. There are some examples that the definition calls out, but it's an inclusive definition, right? So this list that I'm going to mention now on is not exhaustive. Some of the examples which they call out are like online advertising, cloud services, e-books, movies, music, and that's why you called out Netflix, for example, or any of these platforms. Digital storage, in fact, even online gaming is technically covered. So all of these are examples of what is covered. The only exception that really we see, and that also the law has changed, so we'll need to see how that works out, is that if a foreign vendor claims that I'm not the service provider, I'm an aggregator of other service providers, and therefore what I am doing is not online database access, but merely acting as a facilitator or a broker to facilitate the services from a foreign vendor to an Indian consumer, then you may want to argue that this is not online database access and that those fall under something called an intermediary service. Till April 26, intermediary was taxed in the location where the intermediary was located, meaning if it is outside India, then there's no compliance required in India. But that has also changed from April 2026. So that's something, again, that one needs to evaluate if that sort of exception still continues, or anybody and everybody will get covered under one category or the other.
Got it. Would it be right to say, Aisha, that if there's any service, not a good, not a physical good, but if any service, digital service or digital good, which has been supplied either to a business or a consumer, at some point it has to be taxed in India. Now, who taxes the question of understanding, but someone has to tax it.
That's correct. That's correct. So either, as I said, if it's a B2B, then the Indian business has to do the compliance. If it is a B2C, the compliance burden is on the foreign vendor.
Got it. All right. Harsh, so we know that there is compliance.
Yeah, sorry, Vishal, I just want to add one point to what Aisha said, because I can just share the market color from the demand that I'm seeing. So Aisha, what you mentioned in terms of the overseas aggregator, that's actually pretty relevant. That is the majority of the demand that is coming, which is basically overseas intermediaries or basically licensed financial institutions enabling UPI and India local payment methods for all their merchants which are based on particular geography. I think that another use case that we're seeing, which possibly will fall under the same category, is the marketplace. So essentially players like eBay, Etsy, Amazon US, essentially enabling for buyers in India. Again, I'm guessing that will also be interviewed for, but you are the expert. But that is also a very, very important component of the PSCB. And thankfully, which is why PSCB in itself was a very, very progressive regulation. It enabled at least the payment solutioning for each of them. I know taxation is a little behind, probably it'll get there.
Yeah, Harsh, to that
No,
point.
sure, I think that makes sense.
So Harsh, to the point you mentioned, right? Like PSCB is now a regulation which covers so many different merchants or kind of anyone who wants to sell to India despite not being in India. That's possible using PSCB. From a PSCB standpoint, does tax really become a compliance issue, or your focus is, or generally RBI's focus is only ability to process transactions cross-border? However, we know that that transaction detail through banks or through any channel does go through the tax authorities, and that's how cross-border transactions get uncovered. Taking that in mind, is there any solution? Sorry, is there any solution or any tech aspect you are undertaking as part of PSCB, as part of cash-free, to say that will help you as a cross-border entity to kind of give you an all-in-one solution or something?
Okay, so first, in terms of the responsibilities of PSCB, there is something which is regulatory and there is something which is practical. Regulatory, PSCB does not have any tax liability or responsibilities associated with it. However, in majority of the cases, and especially when the merchants are more mid-market or the SME, majority of the merchants are directly engaging with the payment provider, and they will not be engaging directly with a tax consultant in India, which is why it is to a certain extent our job to guide the merchant with regards to the India tax regulations, help facilitate GST or OIDAR procurement. If it is a more nuanced case, connect with more seasoned partners like EY who can help them get the exact amount of what is the GST that they have, how do they file it as well. So, but at Cashfree, especially for the mid-market, we build a product solution which sort of automates the GST identification, whether you are applicable or not, how to procure the GST, and also from a filing standpoint. Now, this obviously sort of caters to the standard use case. Any nuanced use case will probably need to be sort of taken advice from a tax consultant. But the intent is to reduce the compliance cost for merchants who are looking to sort of explore India markets, see whether that's traction or not. So reduce the initial burden, and then sort of they can then expand overall.
Got it. Okay, yeah, that kind of makes sense. Tax. Now, when I'm creating a payment transaction as a merchant, then the question becomes that I know I have to charge 199 rupees per month for my subscription. There are two aspects, right? I can do it inclusive of GST or exclusive of GST. Let's say I accept that, okay, GST is applicable to me. I know I'm an international merchant. Is that something which Cashfree can facilitate, saying that will undertake that GST amount, will also repatriate that or pay to the authorities? Is there a solution which you can bring together, which our merchants can undertake?
So practically speaking, the GST filing is not done on a transaction basis. It is done on a quarterly basis. So let's assume a merchant has processed transactions for $1 million in a particular quarter with me. They have confirmed that again, and it's something they have to confirm. We can just guide, we are not tax advisors, but they've confirmed that the tax liability is 18%. So they have to pay 180,000. So we can facilitate that 180,000 payment at the end of the quarter for them, assuming we have the authorization from them. And this could be done from the accruals that we have collected from the merchant as well. So it need not have sort of multiple cross-border leg as well. That's the product solution that we have built. Again, doing it transaction specific will not be possible or even convenient, operationally convenient from a merchant standpoint. So typically they will, let's assume for the first 2.5 months, they receive all the settlements, and the last 15 days, they basically accrue the payer for all the GST liabilities.
Got it. So, so Aisha, now I've identified as a merchant that I have to comply with this, and probably I'm in OIDAR. How do I register? Like, who do I go to? Who does this registration for me on my behalf? obviously I don't have legs in India. And if you go to the regular CAs, they'll be like, oh yeah, in order to have a GST, you need to have a local address. So where is your local address, right? And this obviously, some of them would not understand. So what are those dynamics in which I can get that GST registration and remain compliant?
Right. So I think the first process there is, once one has identified that they're subject to OIDAR, they need to take, in terms of process, they need to take a registration, file regular returns, and also deposit the taxes. Right. These are three things that have to be done. The registration process is fairly simple and it's online. And it usually takes about 7 to 10 days to get the registration. I think the one must have, which is there from a registration standpoint and which people will need to come around, is that it calls for an Indian representative or an Indian agent, right? Typically, we've seen players handle it in multiple ways. Some are comfortable in sort of appointing an individual who's either a company secretary or a CA who's ready to sort of lend their name for a fee sometimes. And that's the way that a lot of players go by. Some of the larger ones who have higher or low risk-taking capability, if I may just call it that way, consider even hiring an employee in India for this particular purpose. Right. So there are various combinations, but bottom line, the registration has to be taken. And the one sort of must have there, the rest of the things everybody will usually have, is the appointment of a local representative.
And is this something which EY can facilitate as well if a merchant seeks to do so?
Yeah, no, sure. Of course, we can put them in touch with people who'd be happy to help out as representatives.
Got it. Now, the whole idea of doing this webinar came because one of our clients came out and said, hey, we've received a notice. Now let's say you're in the dark all this while you're collecting payments from India, from consumers, and like what happened with Binance as well. They received a notice of almost 700 crore rupees. Of course, their transactions were much higher. What do you do? What are the options as a merchant now? Retrospectively, what can you do? Is there something that can be challenged? Any thoughts there, Aisha?
Yeah, no, sure. And, like we discussed when we first got in touch, is that we've seen multiple cases where these kind of notices have gone out by the revenue, and then clients are sort of clueless, or this is news to them, or some of them are aware and for some reason believe it doesn't apply to them. Various combinations of feedback that is received, right? So I think, and the revenue office has also figured out that this is one of those loopholes, or one sort of fact pattern or use case where there is a lot of ignorance, and therefore they've gone behind it in a big way. Once somebody receives a notice, I think the first step is to assess whether we fall in OIDAR or not. As I mentioned, if one is able to ascertain that they're actually intermediaries, then maybe the compliance under OIDAR may not be required. Right. So that is the first activity that a lot of our clients do. Assuming after the analysis, we come to the conclusion that this is actually OIDAR and compliance should have been done, then technically the law allows the government to go back a couple of years, which typically they can go back to, let's say, 5 to 7 years, actually, because if this is a case of, so under the Indian GST law, there are two kind of limitation periods. When I say limitation period, it really means how back the tax authorities can go back to recover taxes. So the first one is a slightly lesser, maybe a 3-year kind of limitation period, which basically applies to cases where people have done disclosures and the tax office always knew what I'm doing and still did not come back and seek the demand. Therefore, there is good faith in my acts, and that limits the limitation period to, let's say, 3 years. Whereas if it is a scenario where you have not disclosed anything to the tax office and the tax office finds out, then it's a case of, not a bona fide sort of declaration, and therefore it empowers the tax authorities to go back 5 to 7 years. And yeah, so technically there will be tax, there's going to be interest for the past period, and also penalty in some cases. Yeah, and that's why I guess it's important to sort of figure out whether this is applicable, because a lot of vendors do smallish transactions in India, and in that case the number may not look very large, but we've seen that sometimes the business side of it really escalates, and the finance or the tax has not been able to keep pace with the number of transactions which have ballooned in India, for example. Right, so this is just one of those areas to watch out for. If it is a smallish transaction and you're ready to live with the risk to some extent, then maybe that's a call that you've taken as an organization. But if it's a large number and India is a big market for you, then this is something that should definitely get considered.
Yeah, I mean, it's scary if I'm a merchant, honestly, right? So, before we go into the questions, Harsh, do you have any closing comments from Cashfree standpoint? I see a lot of questions are pointed towards Cashfree, so I think you'll be speaking a lot. But any closing comments in terms of what would you see and how would you deal with your potential clients there?
Yeah, I think right now gradually it takes time for things to absorb. I think now increasingly a lot of international merchants are looking at India as one of the second or third market that they want to expand to, just because of sheer size. Now, with great power comes great responsibilities like that, right? Fundamentally, you get that opportunity, but there is obviously some associated tax-related compliance, which is a learning curve. I think it is important that the ecosystem evolves to make sure that everyone is educated enough. Because what I see is that the merchants, it's not the willingness it's the information which is right now the issue. Because a lot of merchants say that, okay, we don't come under Indian laws, OIDAR or whatever the laws your tax is not applicable for us. It's something which needs to be populated a lot more. And which is why I think these kind of webinars will help in just making sure that ignorance is not the reason for any of these lapses. Another point, I don't think so, we have sort of highlighted that, but this, obviously the entire discussion is very specific to the services, and within that OIDAR, physical good does not have this complication. There is no GST implication. Aisha, unless I'm missing something, you are the expert, but that's what my understanding is.
Yeah, no, sure. That's good, Harsh.
Awesome. Thank you so much, Harsh and Aisha, for the insightful discussion. I think I learned a lot. I think as it happens in payments, even if it's 15 years in payments, there's always something new to learn. So thank you so much again, for taking part. But I think we are not done yet. We still have to go through the questions. There are quite a lot, and we'll go through them. But before that, you want to quickly speak about TNP India tour?
Yeah, so before everyone drops off after the Q&A, we are going to have an India tour next week. I'll be in Hyderabad, and then after that, I forgot which city, Vishal. It's going to be in Gurgaon, and then Delhi, Mumbai, Bangalore, to have a meetup for our community. So if you are around that areas, please do drop by, and we will send you some of the locations, the events, and where we are meeting. And I'm really looking forward to see you face to face, so that we can make these genuine connections and continue these discussions as well. Yeah.
Yes. Thank you so much, for that. And we'll quickly move on to the questions. Anupreet, if you can click on the popular tab, that would be helpful. Yes, we'll just go through the questions as ranked. First is, I think this question is for Aisha. Can the applicable tax to the overseas merchant be different than 18% for D2C merchants? Who issues the tax invoice if PACB is tied with different domestic payment aggregators? I think the background here is that there may not be one single provider. There might be multiple providers which large merchants use. In that case, who's liable to provide the tax invoice?
Is that for me? Because there's also, do you want to also address something, Harsh?
Yeah, I'll take the second one.
Yeah.
See, it's important to note that the GST taxation that we are referring here is related to the transaction between the overseas merchant and the Indian buyer. So a PACB is primarily acting as a facilitator of the payment. So there is no issuance of invoice or tax liability coming from the PACB part of it. It is just somebody helping you collect the money from your buyer and sending it to the seller. The taxation is because you have obviously done some business in India and you have to pay the taxes according to it. Now, let's assume you have received 100 INR from the Indian buyer. You can choose to accumulate that 18 rupees taxation at a transaction level and submit it at another quarter, or potentially you take everything cross-border and then at one quarter, based on the overall volumes that you've done, you basically send that back. But again, there will be no invoice per se issued. It is a tax filing based on the business that you have generated with regards to this use case.
Aisha, you want to take the first?
Yeah, maybe I'll just add, I think the question says that for intermediary service, how does the India Tax Authority determine the service recipient? Is it B2B merchants or B2C consumers? So, from a GST standpoint, recipient is based by and large, I mean, that's the first go-to, and then there are exceptions, is really who makes the payment. So whoever is paying for the services is technically the recipient as a ballpark rule. Of course, there are exceptions where somebody else is paying on my behalf, how that gets treated, etc. But by and large, that should be your test, that whoever is the person making the payment is the recipient.
Okay, thanks, Aisha. I think that covers that question. And also, is it 18% always for all the transactions when
That's
it comes
correct.
to
There's only
18%?
one slab rate in GST for services, which is 18%.
I think the third question is very important.
I have a questions here, Aisha or Harsh. So in that case, how would the merchants price it, the 18%? Would they typically have to identify if they're selling 100 INR and the 18%, it's a separate line to be shown in the tax invoice, and then the consumer has to pay for that, the 18%?
That is correct. So, being an indirect tax, usually it is passed on to the customers.
The
right?
customer.
So, so the merchants can recover it either as a separate line item, or they treat it as whatever they're collecting as inclusive of tax and then pay the tax.
Okay. Got it.
Yeah.
Thank you.
I think, like if we take OpenAI, for example, it is inclusive of GST, even though they
Right.
don't have an entity.
Right. So it's basically not a hard requirement or compliance saying like it has to mention that 18%. You can actually put 100 INR inclusive of the 18%.
Yeah.
Got it. Yeah. And if the merchant hasn't been paying for the past 2 years and they're starting to pay that, and they try to recover the rest, so that it will be a sunken cost that the merchants will have to pay. It's like a fine from that perspective. Is that
That's
correct?
For the past period, I think it becomes very difficult to recover it, right?
Right.
Because a lot of times the recipients are B2C and there may not be recurring customers.
Right.
And second is also, I mean, technically, even as per the contract between the customer and the service provider, it was the service provider's obligation to know whether there is any tax and pass that on. Today, retrospectively, going to customers to collect that usually will be
It's
very
not
difficult.
possible. Right. Okay.
Yeah. Is it applicable only to OIDAR? Is there any other industry, Aisha, which kind of is like, look, GST might be applicable to you, or are all such services, part of OIDAR?
So under the GST regulations, there are actually three kinds of buckets. There are some services which are tax basis where the recipient is. There are some services which are tax basis where the provider is. Right. So there are 2-3 buckets like that. And OIDAR is an exception because for digital services, you don't need physical presence. And therefore, they've tried to put this as an exceptional item. And so everything else which are in form of physical services or require presence, etc., is dependent on where those services are provided. Otherwise, the category of service recipient-based taxation is again, a lot of like consulting work or software services, IT, ITS, all of that falls under the bucket of where the recipient is based. But yeah, OIDR is unique to its own sense because one, it is digital services, which there is, difficult to track, no hard delivery, no tangible delivery, let me call it that way. And this is probably the only exception where B2C transactions are also covered. Because a lot of other services are usually B2B and they fall into the other buckets that I spoke about. And to that extent, OIDR is unique.
But just to mention, while GST, this is only, there are other taxes as well, which
Of course,
which keeps Aisha, I'm sure, busy and a lot of work. Because this is just the indirect taxation, but there are TCS and direct taxation.
Of course. So there are withholding tax and TCS considerations for other kinds of transactions. But yeah, of course.
Yeah, and I think for one client, we are currently dealing with an LRS situation as well. It's kind of complex and confusing, but probably that's for another day. So, as a merchant, at what point? I think this goes back to my previous question as well. Is at what point should I start worrying that hey, I'm now popular enough. Now the authorities are going to come after me. So let me find a way to register and speed up, right? Because if you're just starting up as a startup, you're not going to go all in and do all these compliances because there's a cost associated with it. So at what point you say that I have to go all in? Like, is there a limit? I know there's no limit from a tax standpoint, Aisha, you mentioned, but still, any practical recommendation you would have?
I mean, honestly, as I mentioned, India unfortunately does not have a slab limit. It's really how much risk as an organization you want to take your chance. And then at a particular point, you'll have to, if it becomes large enough to get worried, then at that point, you sort of clean it up. That's the more practical approach. But there are enough players who pay even for single line items and all of that. So we have all sorts of combinations of people who are doing the compliance.
Interesting. Maybe Harsh, maybe you can address that question as well, and also the next one, which is some examples where in your current clients, you don't have to name the clients, but where you have assisted in this, not the whole compliance, as you already clarified, the compliance is kind of the tax team's job, but where you kind of help with remittance of the GST and other compliance aspects, which is part of your solution.
Sure. On the first question, I don't think so. I want to give a number because that will sort of be promoting. But I would look at it that way: is that previously an international merchant looking to sell to India would set up a legal entity, have a team here. I think this is a much lesser hassle, and the process is reasonably streamlined. I think domestic GST is tougher to get. At least that's some of the feedback that I get from merchant versus internet. It is not very, very painful. It is the cost of doing business essentially. I think so. It's not that big a friction point, in my opinion. With regards to, so we do support a lot of AI and SaaS-based companies, particularly AI. Couple of names you have already mentioned as well. They are also powered through cash-free, although I cannot use the name. But in a lot of these cases, they also have an Indian entity. But we had to guide them with the fact that you are doing the billing through the international entity because they want to have a consistent global practice is where we sort of facilitated first the education that the fact that you have an Indian entity GST does not matter. You still have to get an OIDAR registration, a GST done, and the entire billing engine was set up for such merchants. One of the names you had mentioned previously as well, the largest AI company in the world. Typically, we see that a lot more in SaaS, especially B2B also in some cases, but predominantly B2C. And subscription-based. For example, players who are selling Wall Street Journal subscriptions and everything also essentially did apply pretty recently as well. Actually, interestingly, I think we're getting a lot of traction also on the influencer space, which is basically educational or videos related to, let's assume AI or tech or any educational. I think influencers in general is becoming an important category. And that again, in our based on our experience, it falls under OIDR, and hence we facilitated few for them as well. But this is something which we're looking to productize and make it absolutely seamless. I think right now we're piloting, so we've done it for like 5 to 7 merchants. But I think we'll make it more streamlined.
Nice. I think if you've done for 5 to 7, then it becomes more relevant and easy. So that's
Honestly,
great.
learning for me. I've never done taxation in my entire life.
No, fantastic. I think that this point is very critical, and we get a lot of queries about this. How do you choose? What is the whether to set up a local entity and do all the compliance, get the input tax credit, essentially create an India revenue center versus stay cross-border and and pay the GST and forego all the other compliance which might be there as a local entity. Aisha, again, I know there's no formula again, when it comes to tax, but do you have any recommendation on how do you choose whether to go local or stay cross-border? Not from a PACB standpoint, that's a different conversation, but more from a tax and compliance standpoint.
Right. So, again, it really depends on what the market in India means for that particular merchant, right? And as Harsh mentioned, the OIDAR compliance is not very painful. So it's a simple form, simple registration, simple tax payment. So just for OIDAR, I don't think it's enough consideration for setting up an office in India. It has to be a certain, if there are market outreach related concerns, those should be your drivers for setting up an office in India, because then honestly, OIDR will be the smallest of your problems. There are going to be 100 other compliances which will come up from a Companies Act point of view, from direct tax, from labor, and all of those other compliances that are required. So and that's what we've seen, even some of the larger organizations, right? Like even Netflix, LinkedIn, etc. It's only when they reached a particular mass is when they considered setting up office in India. Otherwise, before that, they continue to service from, in LinkedIn's case, I think it was Singapore, and so on and so forth. So yeah.
Okay.
Actually, on this, Vishal, I'll just share my inputs as well. I think generally, and especially the nature of the companies that we are looking at, they generally will have an expansion plan across different countries, which then means that the entire tech is built and they will not want to have unique payment infrastructure or essentially people on the ground, for example, invoicing, billing, different for different countries, which is why generally we see a headquarter being the billing engine. Even if they decide to have an Indian entity from a marketing sales standpoint. A good example would be, for example, Apple. They have a pretty large presence in India, but they want to maintain that consistency across all the countries that they cater to. And hence, they generally do the billing. So it's less a taxation, more a consistency across all the markets that they cover. Because when they are looking to enter in India, I'm sure they have plans to enter other Asian countries as well gradually.
Yeah, I mean, that's absolutely right. I mean, even with my experience at Microsoft and Expedia, among all the other international countries where you would typically think of having local entities like Singapore, Hong Kong, Australia, outside of US and Europe, India was the only exception, along with Brazil, where you're like, no, let's have a local entity because otherwise it becomes too much to handle. So it really depends on a variety of factors. But of course, this was in the era where PACB was not there. So a lot has changed, with the advent of PACB. Now, the things have kind of tipped, if I can say so. Right. With that, I'll take one last question, which is especially at the Gift City part. Gift City is a new wild card in this whole piece, and we are trying to kind of become like Singapore or like Dubai, where setting up entities there is easy. Repatriating money there is easier compared to what it is there in India. Do you have any thoughts, Aisha, with advent of Gift City, if anything has changed or it still all remains the same?
Vishal, what is a Gift City?
I can take that also. I've spent last 6 months in on the Gift City piece of it. But what is the exact question? Sorry.
This whole conversation about OIDAR, about GST compliance and all, right? Does bringing in a Gift City entity for yourself or as a merchant, does that change anything?
No, actually Gift City for all practical purposes is outside India. She, to answer your question, Gift City is a special economic zone which has been set up by the Indian government to promote financial services. It is basically streamlining regulations, taxation to encourage financial innovation, which is why a lot of fintechs and even banks for that matter are setting up for shops there as well. But from a regulation standpoint, Gift City is an international destination, which means a transaction from Gift City to India is a cross-border transaction. So if you are based out of Gift City and selling to Indian customers, you will still have the same applicability of an OIDAR when you're in the Indian community as well. So Gift City is like you have a setup in Singapore or US. So essentially, this is the Indian government mechanism to get the offshore money, which a lot of startups were previously keeping in, let's assume, US, Singapore, to get that back in India, have a lot better visibility.
Right. Yeah. The question is actually in the Google chat because it's too long and therefore it couldn't fit into the Slido.
Yes. Yeah. I think Jitesh has asked this. So, Harsh, yes, you're right. Gift City is what Indian government is trying to, and even we have created a Gift City account for ourselves. But the question then remains is there some kind of tax benefit which Gift City is offering?
Yes, let me try and address, and I could read the question now in the Google chat. So I think the understanding is correct. Gift is a SEZ zone, which has been, and Gift has an SEZ and a non-SEZ both setups. Assuming you are in the SEZ, the services which is provided to an Indian customers will continue to be subject to GST, like Harsh also mentioned. However, the payment processing charges charged by Gift City for facilitating these transactions would be exempt from GST, given that operates the IFC regulated. So that is correct. If the setup is in the Gift SEZ zone, then whatever services the setup procures for, whether it is charges of the Gift City or it is any other vendor payments that you're going to do, like maybe your rentals, your maintenance, whatever for the setup, those will be exempt from GST. And this, again, I want to call out that Gift City has both SEZ and non-SEZ setups. This is only for the SEZ setup. If it's a non-SEZ setup, then it's as good as a domestic transaction.
Okay, makes sense. Nice.
Time's Vishal.
Yeah,
it's already time's up. I know that there are still many questions, and I think Abilo also has another questions, but I don't think we can cover it. I think what we can do
share the coordinates, and I'm happy to take offline some of the questions.
Yes, we will coordinate all the questions, and then we will also compile the questions and then share it across with those who make it this time in the webinar, and also for those who hasn't make it but they registered, because we have received 128 registrations and we'll be sharing across the recording as well. I want to thank you very, very much, Aisha, Harsh, Vishal, for putting this through, and also everybody's participations in the questions, because I think I learned a lot, and a lot of the short abbreviations that you're using, I'm new to it. I'm pretty sure many of our audience are also unsure many of the abbreviations from India Authority. I hope that we will stay in touch, and then we will also connect with all of you, and you have Harsh, Aisha's, and Vishal's LinkedIn profile as well. If you do would like to ask us more, do get in touch with TMP team. Yep. Over to you, Vishal.
Thank you so much. Thank you so much, Chi, and thank you so much, Harsh and Aisha, for taking this and participating. I really appreciate a lot of knowledge. And as it goes with PACB and tax, there's never going to be a stoppage of questions. There are some questions on travel as well, which again we can facilitate both with Harsh and Aisha to get responses from. So please mail it out to me or Chi or Anupreet, and we can take it from there. Again, really appreciate your time, Harsh. Really appreciate your time, Aisha.
Thank you, my pleasure.
So much again.
Thank you.
Thank you
so much. Pleasure.
Bye-bye.
Bye.